Hello, good evening, everybody. Welcome to our investors KopiTime today on the 26th of March. Hello, Christine. See you there. Hello, Sheng Zheng. Hello, Wendy. Hello, Tak Tim Wing. Hello, Katirasan. Hello, Jopin. Hey, thanks for joining us tonight. We got something quite exciting today because, we have quite a number of quantitative easing and stimulus packages all around the world, including Malaysia. So I think the market is going to be flooded with a lot of money. And the question is, how does this liquidity is going to affect the markets? And most importantly, will Bitcoin gain an advantage out of this? All right, so we'll go into that in a short while. But let's take a look at the performance of the KLCI today or the market today. All right, so um, market volume is quite high. It's higher than yesterday. It's now at 3.5 compared to about 2.5 yesterday. The index is only up 3.6 points or 0.3%, which is quite not that strong because with this high volume, we're going to expect the market to even go higher, especially after the rebound in regional markets. But it looks like despite all the stimulus package and this quantitative easing coming in, the market is still a little bit not so confident, right? Because the rebound today is only about 3.6 points. There are 540 gainers in Bursa Malaysia and 294 losers, with 335 unchanged. So if you look at the market participants for the past few days, we mostly see net selling from foreign institutions. All right. Since the beginning of this week, they've been selling. There have been net sellers every day, and local institutions and local retail were the one who has been buying. Right. Um, the top gainers for today, there are five of them. We have again consumer products. All right. Stocks like Carlsberg was a main gainer today, top gainer today, and we have Nestle, Dutch Lady, Panasonic, and Ajinomoto. So mostly are consumer-based products, right? And unfortunately, banks today weigh the market down. The biggest loser is actually Hong Kong Financial Group today, down 40 cents. Public Bank is also down 34 cents, 56. And we have other plantation companies that's been going down. We have and also 𝗘𝗙𝗢𝗡𝗡, which are one of the top losers today. So market is quite mixed. We see here banking stocks and plantation stocks apparently were the one that is weighing the market down, and the one that's pushing the market are actually consumer products. So that's brief. That's the market brief for today, and let's go on for today's topic. So if you have any questions about the market, you can still ask us on this live session. But today we're going to talk something which is more important, which is about the quantitative easing and also the stimulus package. It's going to bring a lot of liquidity to the market. The question is where the money is going to go to. All right, so we have prepared a presentation for you. Alvin is going to present his findings on, about where the money is going to go to, and then later he will also share with us how is this going to affect the cryptocurrency markets as well. All right, so over to you, Alvin.
And everything that we bring to you, we hope is of value. Our objective is to make sure that you stay informed during the lockdown, and we are still speaking to you, and you can have access and ask us any questions you like. Today's topic is really for those who just joined us. Don't forget to WhatsApp us at 8408-2070 if you like free access to the ET platform until 7th of April. I know some of you guys are asking whether we can extend it another week. We will get back to you. We understand that the lockdown has been extended as of yesterday till the 14th of April. So hang tight. we will still be committed to be here to speak to you every night at 8 o'clock. All we ask you to do is share this or tag 5 friends in the comments so that they can also access our thoughts and be able to share this journey with us. Okay. Now, few things that's happened. 2 nights ago, last night, we actually featured a CEO, executive chairman of Notion VTech. So if you missed out that live stream, do check out and like our Facebook page or follow us. You can rewatch that segment that went out for almost 1.5 hours. If you guys like to see more CEOs on the show during this lockdown period, I'd just like to get you guys to type CEO in the comment section below, so that we know that you guys find these segments useful. We do have a few invited speakers tomorrow and Saturday. And if you guys like to see more of CEOs, just if you can, just even put down their names, and we'll see whether we can get them on the show. Now, so two days ago, I think what Bank Negara announced was quite unprecedented. If you look at what's happening around the world, 2 days ago they announced that all banks must give automatic waiver of a 6 months moratorium on all outstanding loans for SMEs and individuals, more specifically housing loans, hire purchase, everything. Most of the loans will be covered except for credit cards. Yeah. So I think that's something that we would like to discuss a bit today, and really what I want to give you guys are some stats to go with. Now we're also getting a lot of requests. Today HSBC have come out and said that during their 6 months moratorium, the interest that is accrued will not be compounded. Okay. If you're not sure what that means, right, and you like us to hold a segment which is a bit more specific, which is more on personal finance, on how do you actually calculate what is your total cost if your bank does not waive the compounding segment of your interest during the 6 month period, and if you not want to participate, or if you do participate, what is the actual cost, right? So news are still coming in. I think banks were quite shocked, but really kudos to our central bankers for taking such swift action. This is the first time in Malaysia we've seen something like that, and what we're now seeing around the world as of yesterday or today, Congress has actually passed a emergency bill to literally create $2 trillion US. They call this the COVID aid package, right? And it was a unanimous decision, which is quite unprecedented again, that they come together and say, yes, let's create $2 trillion. Now let's remember this. The Federal Reserve has also 2 weeks ago mentioned that they will do a buyback of 700 billion, and then they said nope, it's going to be unlimited, right? That is on top of the $2 trillion. There's also going to be a debt buyback. So the amount of liquidity that's going to be in the market with record low interest rates, the whole idea why we want to discuss and why it's really right for us to talk about cryptocurrencies today, is that could crypto be a hedge against this excessive creation of paper money, right? But just to give you an idea, they don't technically have to print the money. It's really a debit credit in your bank account, right? And myself, Peter, Benny, Andrew are here to discuss that topic today. So just on the local front, I want to share some statistics with you guys. What we did was, this is really, this is not my work only. I cannot take credit for this work. This is a collective effort from my whole team. So you must understand, we are very busy. Literally, we have a 24-hour turnaround time to make sure we get the numbers out to you. If you guys like these slides and you want access to these slides, just type slides in the in the comment section below. And also, if you appreciate our hard work, we work very hard for this. We will also appreciate if you can tag 5 friends in the comment section as well. Now, our target is to get to 1,000 views. Yesterday we hit past almost 700 views, so we are almost there. But tonight's topic is quite important. Now, what you see on the screen in front of you today, we actually dug out all the outstanding loans. Now, for Bank Negara to make such drastic, unprecedented moves to actually allow a 6-month moratorium, let's look at all the outstanding loans in the country today. Now, what you actually see, the biggest chunk of loans today are actually residential property, which means this immediately gives relief, right, to all homeowners who have a mortgage, that they don't have to pay their mortgage principal plus interest for the next 6 months. Now, the second largest loan sector is actually working capital, right? We're a bit unclear on whether SMEs will still have to pay for this, but this is generally with the businesses where they need working capital to roll their business, right? Now, the third largest segment you can see is actually non-residential property again, right? So property. So what we did was I actually summed up very quickly the top 5 outstanding loans as of January 2, 2020, by purpose or by sector. You're going to realize that residential property alone takes up almost 43.2%, almost half of all outstanding loans today. Now, that is huge, right? And I'll get to this. Why are we covering this? Because there is one sector that will definitely benefit in the long term when we talk about quantitative easing. So if you add up together, you're looking at almost 800 billion ringgit in loans purely on the property sector. That's a huge amount, 43%. Right. The next two are basically transport vehicles and passenger cars. So really, if you look at the top 5, what Bank Negara did was must be applauded, because they actually was able to ease cash flow for a lot of households and also businesses overnight, right? So if you look at the top 5, if these top 5 are exempted, really, what you're actually doing is, instead of the repayments going to the banks, what they're saying is that the repayments stay with the individuals, therefore providing a lot of liquidity in the stock market. Now, we also had a discussion today, right? Personally, I don't think there's a better time to look at stocks today, because you've just been freed up of a lot of commitments for next 6 months, starting April 1st. So if you had issues of, I couldn't save enough money to set up a portfolio, this is really the perfect opportunity to do that. Now, when I say set up a portfolio, I'm not asking you to go and buy stocks today. But what you can now plan is the next 6 months, you can actually put something aside to actually set up your own personal portfolio. And hopefully this amount can grow and continue to grow over the long term, right? So, in the Chinese wording, say, this is really good opportunities that's offered to you. What we're trying to do is make it less scary for you, for those entering the stock market, and our goal is to make sure that you stay informed and be a data-driven investor. Now, just to give you guys an idea, what happens when economies create a lot of money, right? One of the symptoms, right, when the economy creates or prints a lot of money, you're gonna find that asset prices tend to inflate over time. So if you look at this, if you can see the steep spike in housing loan financing in the last 10 years. Now, this chart won't tell you the volume of property transactions, but I think if you're staying in Malaysia the last 10 years, for a fact, if you had bought almost any other property, the price would have gone up, right? This is largely due to the fact two facts that have happened. low interest rates, banks are more willing to lend, right? Therefore, what happens is that property prices go up as there is ample liquidity and a lot of creation of extra money, right? So what we will likely see going forward in the next, after we get out of this crisis we have at the moment, asset prices are going to be inflated, right? That's what we're going to see because there's going to be ample liquidity in the market. So when I talk about very main asset classes, to most Malaysians will be property and stocks, right? So these two asset classes won't be excluded when there's excess liquidity in the market. If we go into, so what was quite worrying when we actually start digging out the stats, and why they hit the pause button on all the other loans, I believe they're hoping that yes, there is some extra cash flow for Malaysians to tie them over. However, if you look at what has been driving the Malaysian economy now, if you look at the Malaysian GDP, almost 60%, 60 to 65% every year is based on consumption. Now, if you look at the steep spike in personal loans since 2007, it is insane, right? It's gone from less than 10 billion ringgit. Today, we stand at 125 billion ringgit. That is a massive, massive, massive spike. Yeah. Now, why do I talk about this? Because personal loans are effectively non-collateralized, which means that you don't need property, don't need anything. You just apply and you get a personal loan, right? Which means that if you default, there is no asset to back it up for the banks to repossess, right? As opposed to, let's say, a hire purchase or even a property, right? So there's nothing to lay long, okay? But if you look at the number is quite staggering. 125 billion. That's on personal loans. And if you compare this to, say, commercial or non-residential property in number 3 here, which is 225, which means that in a very short period of time, personal loans are half that of non-residential property. I guess the question here is, are the loans going to long-term productive use, right? My best guess is that a large part of our GDP growth has been fueled by consumption, and a large part of it is being fueled by debt consumption, which is people taking debt to consume even more. Now, this is absolutely not sustainable, especially when wages don't move up as quickly, right? Because we are effectively spending future cash flows. If you guys have any questions, or if you guys like these slides, I mean, we know we simplified a lot in this aspects here, but it's taken us a lot of time and effort to actually come up with some of these insights. You can see. So again, if you guys really like some of this and you like to download this, really all you have to do is drop us a WhatsApp at 8. What's the number again? I'm trying to remember. Benny, what's the number again? 8408. No, 8484. Okay, sorry guys. Okay, WhatsApp us at 84082070. I would imagine by next week we'll probably memorize this by heart, right? So WhatsApp us if you like these slides. It's not on right now, but as soon as we finish this live stream, we will make this available to you. All you have to do is WhatsApp us. Again, if you don't have free access to Equities Tracker, please take full advantage. There's over more than a week left. Drop us a WhatsApp on that same number. Yes, it's a landline number. It is our official ET number. You can actually text us there. All right. Now, let's move on. Just to give you guys an idea on the landscape. So we know there's going to be massive liquidity, right? Now, one of the very clear beneficiaries, which doesn't need a lot of analysis, is this: when there's a lot of money in the system, one of the guys that will also benefit from this are actually the financial institution or banks, right? Because their business is surrounded by liquidity or numbers. So the more money is there, the more money there is in the system, because they only make a margin of whatever they lend out versus, very simple basis, whatever they take in as deposits and whatever they lend out, they make a margin of that. So the higher asset prices go, the more money in the system, the more profits they make. So in the long run, As long as banks manage their non-performing loan percentages well, they will do very well in an environment like this. All right. Okay, moving on. Just to give you guys an idea, what do we mean by creation of money? Now, this is a chart that spans from 1973 to 2019. This chart shows you how much money has been created. Okay. Now, without you knowing it every night, when you're sleeping or not, there is money being created. All right. And if you track from 1973 to 2019, now we went to a lot of great lengths to get this data. But you can see, by the way, this is not a stock price. We just hope it was a stock price. This is your money and my money. What this actually represents, if I inverse the chart, is this is a reason why a house price is now much higher than it was 20 or 30 years ago, right? I used to remember people saying, oh, I bought this, young man, I bought this house for X amount of dollars 30 years ago. Wow, today I made so much money. Know that you didn't do anything special. It was just because there was development in the country and they created more liquidity, okay? But really, that's it. So how do you hedge yourself in a very highly liquid environment? To give you guys perspective, the amount of money that's been created, the growth, it is about 235 times over a 45-year period, okay? So this is a compounded figure of 12.6%, okay? So if you're feeling very good about putting your money into FD earning 3%, you might want to rethink this, okay? Because I'm being data driven here. I give you guys the facts, but you need to make that decision, yeah? Now, what is more shockingly why we have had massive movement in asset prices in the last 10 years, especially with Malaysian. If you look at, this is over almost a 10-year period, it's almost 9-year period. So just to backtrack again, right now we're almost at 2 trillion ringgit. That's total 2 trillion ringgit circulating around the whole country, right? All in ringgit is $2 trillion. In the last 10 years, we actually created double that amount, right? So you can see that very steep curve. That means we went from slightly less than 1.1 trillion to 2 trillion in less than 10 years. And this is where that inflation that you feel actually comes from. Now let's talk about the US dollar, right? Let's talk about US dollar. US dollar from the same period from 73 to 2019, they created 18 times more, okay? But we have to remember the US and Malaysia are two very different countries. Malaysia is an emerging economy. US at that point is already a developed nation, right? But what you want to actually notice is that if you can see here, I'm just highlighting here. Can you see what's happening to the curve? Right? You realize that it's getting steeper and steeper. Again, for those who just joined us, this is not a stock price. Don't feel so happy. Okay. This is actually the amount of US dollars that have been being created. So if you look at this period, now what we want to have a discussion with Peter and Andrew and Penny and myself really is $2 trillion. Right now, there are 15 trillion US dollars circulating around the economy. Now, also remember this: a US dollar is used for 80 to 90% of the world's trade. So, but ringgit is only used in Malaysia. Okay, so there's a big difference. Okay, so the creation of money, they're not just creating for the 300 million US citizens. They're also literally creating money for trade, global trade. If you take an even longer time period, from 1960 to 2019, end of 2019, they grew about 51 times. Yeah. So really at 15 trillion, 2 trillion over 15 trillion is what? You're looking at about 12 to 13%. Am I right? You're looking at 12 to 13% of increased cash. So the question today we're going to talk about and ask Andrew is, how does this affect something like Bitcoin, where you cannot create, you cannot just keep creating Bitcoin because it's a decentralized asset, right? Okay. And maybe if we can touch on, please stay to the end, because those who are interested in crypto, we do have something very special for you. Okay. That's it for me. If you guys have any questions,
Okay, hold on. First of all, for those who have just joined us today, especially those who are still new, welcome to our investors KopiTime. We're going to have this on a nightly basis until until the lockdown is over. All right, so please do join us on a daily basis. And if you have any questions, you can type it down on the comment section. And if you want to have an access to a free equities tracker platform, please do WhatsApp us at that number that Elvin just mentioned, which is here, 8408-2070. All right. So just WhatsApp here, and you'll be able to see a list of goodies that we'll be giving out as well. And we've also promised to give you guys the EPF list, right? Where companies that are exposed or have EPF as an investor. Because you already reached 600 views yesterday, so we're going to give it to you. So it's now available. Just go to the WhatsApp once again, and you should be able to get the list from there. All right. So keep stay with us, because Alvin has just mentioned earlier as well. Andrew has something. He's going to give out free Bitcoins, right? And he's going to share with you how you're going to get it. But first of all, what you need to do is you need to tag 5 people. Okay? Because he's going to be giving you some Bitcoin. We need these views today to reach 500 people. We have 380 people, so it's only 120 left. So if once we reach 500, later on, just stay with us until the end. Andrew is going to show you how you can get your Bitcoins. So please share this right now, and also tag 5 people right now, so that we want to reach that 500 and we shall receive our Bitcoin. All right, so that's for later stage. Okay, so Peter, you have something to say, right?
Yeah. Okay. Much to talk about this massive stimulus by the US government. Can I have a slide? Yeah, this one. Okay. If you all know that as Elvin mentioned earlier, initially Fed was actually announced a 700 billion quantitative easing. But subsequently, they actually lifted up the limit. It became an unlimited quantitative easing. So I'm trying to look at it on the perspective of this. To link to this also, we know that the US also announced 2 trillion stimulus to the economy. To give a sense how big is a 2 trillion stimulus, the US GDP is around 19 trillion. So a 2 trillion stimulus is equivalent to a 10% GDP, which is, of course, the largest among all the countries. The second largest was actually 4% of GDP. So this is really a massive stimulus. And part of this 2 trillion stimulus announced by the US, what was interesting is part of it involved passing $1,200 direct to the individuals of the US if they qualify. So it goes straight to their pocket. So you may wonder, why is this kind of method being come up? It's not the first. I mean, if you remember during George Bush 1, during his presidency period, that he did about the same type of stimulus that actually give out cash back to the citizens. So this is technically the second time the US is actually doing this. But to give you imagine why they need to do this, if you look at this chart, this chart actually shows the total cash held by all the commercial banks in the US. This chart shows a period from 2007 to June 2009, or the 2009 period, right? So you notice the gray area actually marks the recession period or the great financial crisis. So what is interesting, notice that the cash of the bank suddenly shot up during the crisis period. It shot up simply because of the quantitative easing being implemented by Ben Bernanke during those periods. In 2009, the Federal Reserve balance sheet was only $1 trillion. By 2015, by the end of the QE, Fed's balance sheet actually expanded by 4.5 to 4.5 billion. That means in the 7-year period from 2009 to 2015, the Federal Reserve actually created 3.5 billion in their balance sheet. Okay, if I go to the next slide, if you go from the longer period, from 1970s all the way to current. Can I go to the next slide, please?
Sorry.
Yeah.
This one?
Yes. This is from 1970s all the way to currently March 2020. So you notice the spike of the cash held by the bank, it goes all the way until 2014 before it peaked. From the bottom in 2009 to the peak there is close to 2.6 trillion US dollars. So that means what we're trying to say here is of the 3.5 billion additional liquidity created by the Federal Reserve, close to 2.6 billion actually got stuck in the bank. So when it got stuck in the bank, it's actually not a very good sign, because this money are supposed to be used by the bank to actually stimulate the economy, to create more lendings, to create more businesses, to create more economic activities. So as you can see, the number only start to fall after 2014. That's why there are sometimes when I talk to investors, I'll actually explain to them that the real economic recovery in the US actually only happened after 2014. That is when the money from the QE actually started being deployed to the economy. So I thought give a perspective of why that this 2 trillion stimulus will be more impactful than the last quantitative easing that was being done, simply because this involved the cash going straight to the citizens of the US. If I go to the next slide, there's always this fear about a recession or a depression for the matters. So what we did was we actually compiled the history of all the US recession, big and small, since the Great Depression in 1929. Okay, so if you look at this slide, shows the first 7 recession, and if you look at it, the Great Depression in 1929 actually created a drop in the US GDP by 27%. Okay, to cut the long story short, if you look at the trend of the impact of recession on US GDP, what you can see is that it dropped from 27% to 18% to 12%, and subsequent recession, the impact on the US GDP is only a single digit. If I move on to the next slide, which shows the second 7th recession from the 1960s, and again you see a similar trend, that most recession in the US only have an impact of a single digit drop in GDP. If I draw your attention to the last one, which is the Great Recession, which is our 2007 Great Financial Crisis, despite we seeing that the S&P dropping 40%, the real impact on the US economy is only 5% drop in GDP, which is by far much lesser than what we see in the Great Depression. Okay, another point we like to highlight in these slides is that of the 14 past recession in the US, if you look at the causes of it, 7 of it are actually due to the Federal Reserve hiking interest rate. So of the past 14 economic crises or recession, half of it will actually happen because the Federal Reserve hiking interest rate. So when you have the scenario where the Federal Reserve is already cutting interest rate, so it is already a preempt move to actually avoid a potential recession or a full-blown recession. So what I'm trying to say is, with this massive stimulus that the US, not only the US, even your Canada, New Zealand, or even for like of Malaysia, this is actually a move that we can actually avoid a potential recession or a depression due to coming from this potential COVID issue. Yeah, that's the point I'm trying to say. Over to you, Benny.
All right, so we have seen volatility in currencies, right, in the past few years. In fact, so the question is now, how is this going to affect the cryptocurrency market? So with us, we have Andrew to let us know how is this going to impact the cryptocurrency market and what lies in the future for cryptocurrencies. Andrew, over to you.
Okay, thanks, Benny. Hi, everyone. Thanks for joining us tonight. Okay, so I think if we can share the slides, I just want to start with Benny's slides.
Yeah. So which slide you want?
The Amazon chart.
Yeah.
Cool, thanks.
Can you share my screen?
Okay, thanks. So, okay, look, if you guys can just comment in there. Any of you listeners out there right now who already own some Bitcoin or own some crypto, just put Bitcoin, right? Comment Bitcoin. I'd like to just get a gauge to see how many of you actually are already invested in this asset class. It'll be good to see how many of you are already in this. Now, if you really think about it, uh, Bitcoin, which is the oldest of all cryptos, is about 10 years old, 11 years old, right? So it's actually in its infancy. It's a brand new asset class. Um, Now, following on from what Alvin and Peter presented earlier, we talked about quantitative easing, which is essentially printing money or increasing liquidity into the economy, which is essential in current times because, I mean, if you think about it, essentially the whole world is on a standstill. The whole world has been shut down. The entire world's economy has been shut down in order to get us through this difficult period, right? And with everything shut down, no commerce and no economic activity, therefore there's no money. There's no money velocity, right? So money is not working in the economy. So with this brand new quantitative easing that was just announced or this unlimited quantitative easing that's been announced by America, if you think about it, that pushes the Fed's balance sheet to $6 trillion. Does anyone know how many zeros there's in $6 trillion, right? Now that's roughly 1/3 of America's GDP, right? So that's how much the Fed's balance sheet is. So what that means is that there will be a lot of money pumped into the economy. Now, if you looked at the last time when quantitative easing started, as Peter showed earlier in the slides, it actually started in 2008. Now, since 2008, again in the previous slides that Alvin showed, you saw the growth of the amount of money that's actually in the economy. You also saw the growth, and you could probably see with your own eyes the growth in asset values, whether it be stocks or whether it be properties that you are probably invested in. Now, but then a lot of that money was actually stuck in the banking system. Now, what is being proposed right now in America is that the money goes directly to the consumer, right, in order to actually drive the economy. Which, in fact, there was a recent Fortune article that I was reading that actually said that I think it was called the Banking for All Act, right? So it surfaced in the Senate, where it talked about digital wallets and it talked about the digital dollar. Now, as maybe a lot of you know, China actually was the first country to announce about the digital renminbi. But now, the Fed is now talking. I mean, in America, they're talking about the digital dollar, and that is probably how they're actually going to channel that money to the people on the ground, right? So it's actually going to go directly to the people to the man on the street, man and woman on the street, and so that they can actually have this money in hand and they can actually hopefully kickstart and spur the economy, right, by spending that money and have that velocity of money happening in the economy. And if you think about that, that's a lot of money that's going to be available, right? And again, in the local context, if you think about it, Bank Negara, for the next 6 months, right, is essentially freeing up cash flow, right? Your monthly cash commitments. Obviously, you can still go and use that to pay your bank loans, but they are essentially freeing that up so that you can use that to spend on other things. So what does that tell us? That tells us that you now have quantitative easing, which means there's unlimited amount of money. So if you assume that there was $100 in the economy, and now they're printing another $100. Now, if there was $100 in the economy and you had $10, you actually have 10% worth of that money. But if they printed another $100 and now there's $200 circulating in the economy and you still have 10, essentially your 10% has reduced to 5% of the total circulation of money, which means you've essentially lost. If you are holding cash only, then you have lost 50% of your worth, of your value, right? So what does that mean? That means in such scenarios, what you really should be doing is deploying some of the cash that you have in order to hedge this losing your money into assets that will appreciate, right, over time. And one of the new asset classes is obviously crypto, right? Now, crypto has received a lot of bad publicity, I suppose. But if you think of crypto as your hedge in the future, right? You're hedging, and if you think of investing as a portfolio, you can have a portfolio with multiple asset classes, and you can determine what asset classes you are comfortable with. If you're a property guy, then you have the majority of your portfolio in properties. If you're a stock guy, then you would have the majority of your portfolio in stocks. Obviously, having a percentage of your portfolio in a new asset class such as crypto wouldn't hurt. Obviously, crypto is highly volatile. It swings up and down, and if your heart can't take it, then I suggest you do not get into this asset class. But if you can actually manage that risk, and if you were to put 1% of your total investment portfolio into your investment portfolio, and you can afford to lose that 1%, which you probably won't lose all of that 1%, but then it has the potential to grow over time, right? And to grow quite in quite larger percentages as compared to the other asset classes. So if I can just start by going back, right, to maybe the late 90s and early 2000, right? If you think about it, everybody knows Amazon today, right? And so if you look at the chart that's in front of you, that's the Amazon chart, right? I think they IPO'd probably around $2, and then it hit a high of around $106. Then when the dot-com bubble burst, right, it dropped from a high of 106 down to around $6. Now at that point, how do you feel? Like you would have thought that the whole world's crumbling around you, right? Now that's a zoomed in view. Now, can you imagine if you were in the 90s, you bought $106 per share of Amazon, it's dropped to $6. What do? Do you sell it all? Do you like that's it? Game over. Benny, if you can help me move to the next slide. Now this. Okay, thanks, Benny. Now this, see that little red bump there? That's where the dot-com bubble burst, right? And that's it. It's just a small bump in the road, because it rolls from $6 over the next 20 years. I think the next high, the high was actually February. It was actually last month at around 2,200 or 2,000 something dollars per share. So if you took the long view and you took that into perspective, that was actually nothing. But if you were in 2001, right, it was in the midst, the dot-com bubble had just burst. Your world is over, right? But then if you actually took the long view and you hedged on the trend, right, that was happening around us with the internet, with different technologies that were emerging. Obviously, Jeff Bezos made the right bets and all, but you see how it's actually gone from $6 right up to 2002. If you can move on to the next slide, please, Benny. Thank you. Now this shows the chart of Bitcoin, right? So Bitcoin, obviously, when it started, Bitcoin was a fraction of 1 cent, a fraction of a cent, right? That was in 2010. Obviously, it went nuts in 2017, towards the end of 2017 and early January, where it hit around 20,000 USD, from a fraction of a cent to almost 20,000 USD. And today, as it stands, I think Bitcoin is probably around $6,600. Now, if you had taken the long view 10 years ago till now, I think that there's a slide there at the end that I'll show you what your percentage would have been if you had included Bitcoin as an allocation, as an asset class in your asset class allocation within your portfolio. You would have seen how well you would have performed, right? So if we move on to the next slide, Benny, thanks. The next slide basically just shows the Bitcoin hash rate. For those of you who don't know, the Bitcoin hash rate, just think of it as how secure the Bitcoin network is, right? So obviously you can see the trend. The trend is up, right? Even though it's come down in the short term, but the general trend is still up. So Bitcoin over the years have become more and more secure. And Benny, if you don't mind, just the last slide. Now, if you had bought $100 worth of Bitcoin back in 2010, right, and that's it, you just bought it and kept it and forgot about it. At the beginning of this year, your $100 would have turned into $9.2 million. That's a 9.2 million percent increase in your portfolio. So even if you had a 1% allocation in your investment portfolio in Bitcoin, you would have done pretty well for yourself. Yeah. Look, I'm happy to take some questions and move on. Sure. Yeah. Okay. Look. For starters, there is only a limited amount of Bitcoin. There will. It's part of the Bitcoin algorithm. There will only ever be 21 million Bitcoins created into the system. Right now in circulation, there's about 11.3 million Bitcoin in circulation, of which some are lost, some are stuck. And therefore, I think realistically, there's probably about 14 to 16 million Bitcoin in circulation. And the rest of the Bitcoin will take another 120 years to be fully in the system. So when you have unlimited quantitative easing, where your fiat currency, right, your paper money is going to be worth less than, or it's going to get diluted because of the quantitative easing. You have this instrument here called Bitcoin that you can, you don't have to throw everything you have at it, but you can allocate a small percentage of it into it because of its scarcity. It's almost like, some call it digital gold. Yeah.
Wait, the mic muted. Yeah,
I
everybody's
can hear you, but I'm not sure audience can hear you. No? I can hear you quite well.
Yeah,
I can hear you quite well as well.
no sound.
Oh, some says that you're muted.
Hold on.
I can hear good.
Yep. I can hear you good from here.
Yeah, you can hear it.
Yeah.
They said no sound from the live. Any reason?
Five. Maybe five.
Why?
Can you guys hear me?
Yeah, I can hear you. I can hear
No, can you hear me or not? I'm not sure if the left can hear me. They can hear me.
Yeah, they can hear us, but not only except Elvin. I don't know what's why
Yeah.
they can hear you.
Yeah. Maybe I can ask a question on Andrew. There's this $1 million question that in everybody's mind. How do people usually value Bitcoin?
Wow, that's that's an interesting one. Look, now we cannot think of Bitcoin as a company, right? Because obviously it's not a company. It is actually not owned by anyone, yet it can be contributed to by everyone. So it is as democratic as you can get. Now, there is, if you think of it as production, one way to look at it is that there is a cost to producing a Bitcoin, right? So obviously, for those in the know, there is this thing called mining, and in order to mine Bitcoin, you obviously need to invest in certain equipment, in rental, in security, in machines, and these, you know, these are investments into mining Bitcoin, right? And obviously there is a cost of production, and one of the variables that contributes to that cost of production is your cost of electricity, obviously your cost of resources and personnel and all that, and security, and electricity to produce per Bitcoin. So cost of production will be different depending on where you are in the world, and of course depending on economies of scale. So that's one way to look at it. The other way to look at Bitcoin is, how do you value technology stocks, for example? I mean, if you look at technology stocks, if you look at the early days of Facebook, um, Facebook didn't really have much of a revenue model. But when you look at technology stocks, you are looking at its potential, what it could be, right? So obviously, when you look at Bitcoin, you are making a bet on the future. You're saying the future could look like this, and if everyone were to do it, then the future is gonna, it's gonna do well. So if you look at the FANG stocks, for example, you look at Facebook, right? You look at Amazon. These are all technology stocks where in the beginning they didn't have much of a revenue model, but people still bought into it based on its potential. So when you look at Bitcoin, the picture may not be complete now, but as different factors come into play and come into place, then it has the potential to propel Bitcoin from where it is today to where it will become tomorrow. Now, I think, for example, if you look at YouTube, right? YouTube live streaming. Before, we were stuck behind a computer, behind a PC or a laptop. But as soon as the world's telcos started rolling out 4G, right? And the world's mobile phone manufacturers started rolling out 4G devices, immediately you could now stream on the go. And that just gave a boom to Instagram, to Facebook, to YouTube, right? So it was about getting the infrastructure in place for it to propel forward. So obviously, we're still in the very early days of what the potential of Bitcoin could be, or the potential of crypto could be. But if you just look at the history of technology, the history of the internet, I think it's going to propel us forward. Obviously, it is a natural evolution. The form and the modes of payment that we're so used to using online now, like credit card, right? You pay via the credit card. That's 1950s, 1960s technology. Obviously, it wasn't built with the internet in mind. When Bitcoin was invented, it was obviously built with the internet in mind. So, yeah, that's my
Alright.
take on it. Yep.
Okay, I'd just like to add a little bit more because I tried to attempt a few questions. One is about adoption and what kind of direction or what sets the direction of Bitcoin. So, Faiz, can you go to my screen? Share my screen, please. I'm just going to show you the chart, right? The correlation between the Dow Jones or the S&P against Bitcoin prices. So if you look at the chart here, this black line that you see here, that's the Dow Jones Industrial Average, right? And the orange line here is price of Bitcoin. Now, if you look at just at the chart alone, it's not easy to find the correlation because there's a lot of volatility. So I've actually smoothed out the line with a 50-week moving average. So the red line that you see here is the 50-week moving average of the Dow Jones Industrial Average. This blue line here is the 50-week average of Bitcoin. All right. So if you look prior to 2018, there was not much correlation between the performance of US market and Bitcoin. But what happened at the end of 2017, in December 2017, Bitcoin futures were traded on the traditional market on the Chicago Mercantile Exchange. So if you look at this part over here, when there was an announcement that they're probably going to trade in the futures market, you can see Bitcoin prices actually trying to catch up with the performance of the Dow Jones Industrial Average in year 2017. So once it has catch up and the Bitcoin futures started trading, you can see the correlation now is a little bit more in line with the Dow Jones Industrial Average. But of course, if you look at the two lines, the red line and the blue line is a bit more volatile. All right. When the Dow Jones came down a little bit, Bitcoin actually came down even more. But you can see that the direction is now pretty much similar. So from this, we can see that the adoption of Bitcoin has already come into the traditional markets. And if you want to find direction, I think if you even look right now, when we see Dow Jones started to rebound, you see Bitcoin started to rebound as well. And Dow Jones started to fall, Bitcoin started to fall. So you can actually see some correlation now with the performance of the US stock market. So that's just one I add. Thanks.
Thanks, Benny. If I can just add to that, so yep. Yeah, if I can just add to what Benny just said, it's right. So with the introduction of the Bitcoin futures by the CME, the Chicago Mercantile Exchange, what that meant was that now institutions could actually participate in Bitcoin. Now that is just the futures, the derivative market, right? Institutions are still not yet allowed, or not, they're not yet in the actual Bitcoin itself. So they can participate in the derivatives market, but they can't actually come in and own that asset, right? Because as I mentioned before, there is need for certain infrastructure to be in place before that happens. Now, when that happens, with the amount of quantitative easing that is happening, I can only think that it is obviously an asset class that, as part of a fund manager's prerogative of adding or diversifying their portfolio, they would want to have another asset class within the portfolio, no matter how small, right? It could be, I mean, if you look at gold is an $8 trillion it has an $8 trillion market cap, right? If you were to then go, let's say a new asset class becomes available, which is Bitcoin, and all the existing asset classes were to then shave 0.5% of their portfolios and allocate into the crypto asset class, right? Not just Bitcoin, just the crypto asset class, which is now slightly less than 200 billion. What would the effect be? on that asset class as a whole, right? I'm just taking a more macro view of it. And again, look, today, it may, it might seem like a scam. Obviously, in the crypto world, there are a lot of scams, right? But it might seem like a scam. But once it becomes real, then it's real, right? Yeah. So with that, I think that there were some questions. Aswin said, how do you see the Bitcoin halving in May? Please share your views. Look, traditionally, every time there's a halving, I think this is the third halving, right? Every time that there's a halving, what happens is Bitcoin will dip a little bit lower because the miners will stop mining, because obviously, if Bitcoin's price would have maintained, then their income would have dropped by half. But then again, if you look back historically, and obviously history does not predict the future, it always dips a little and then it goes up, right? But then things are never static, are they? And if you look at it statistically, we actually do not have enough data points to actually to do any predictive analysis. So look, I think at this point, Aswin, your guess would be as good as mine. But again, we also have an unprecedented situation on our hands, which is the COVID-19, right, where the whole world's economy is shut down. What this might drive is it could potentially drive more online activities, right? Everyone is stuck at home, but everyone is still connected through the internet. It may drive for more commerce. Obviously, there are many methods for payments online right now, right? You could set up a PayPal account. You could, even within Malaysia, you've got a dozen and a half of e-payment wallets, right? But as a general trend, I see digital wallets being part of our future, right? Part of our very near future. Whether it's starting in America, China kickstarted it, and whether it's a government-issued e-wallet or a company-issued e-wallet or an e-wallet that's been created, for example, like for Bitcoin. It will be part of our future.
All right, guys. We have to interrupt. I have to interrupt you a little bit because we are out of time, and I think we're going to continue this session again next Thursday. What we're going to do is we're going to compile your questions and we're going to have them answered next Thursday. All right, Andrew is going to answer them. Unfortunately, Andrew, today we did not reach 500 views. All right, we have about 400 plus views. So I'm not sure we still want to give the Bitcoin, but I suggest why not you come in next week Thursday, right? And just share as many friends as possible who wants to benefit from this. And you can also tell your friends, you know what, there's going to be free Bitcoin if you come and join us next Thursday. All right. And then we'll show you how you can get your Bitcoins. Okay.
Benny,
so are we gonna make Thursday crypto night? Crypto night.
Thursday crypto night. Yeah. You guys.
Look. Why don't we let the people comment? Yeah, if they're interested to hear a bit more about crypto, then we could make Thursday crypto night.
Thursdays will be crypto night. Yeah. Type in crypto night if you guys can hear me.
Yeah, but definitely we're going to have one on Thursday because we have quite a number of questions unanswered. So we'll bring all the questions up. We're going to answer these questions. So now at least you have the background of the importance of cryptocurrency right now in our financial market today. So it's going to be more on answering questions in the next week when we come back again. All right. So
Benny, I think for those who have stayed with us, I think we should still give out some satoshis, right? So I'll let you do the announcement.
Okay. So Andrew is good. Andrew is being a little bit more generous here today. Okay. So now just WhatsApp us this number if you want to get a free access of our equities tracker platform until 27th of April, where you are able to view, financial data of public listed companies in Malaysia, and also some of the tools that you can use to help you in your investments. So please WhatsApp here, and you'll be able to also download some of the freebies that we have promised in the past few live on Facebook that we did. So if you want to view the previous recordings on live, please go to our Facebook page, like the Facebook page, and follow us. So whenever we have new announcements, it will appear in your notification. All right. So if you want to view all the previous videos, please go and check out our Facebook page. They are all there. All right. And you'll find out what those freebies are for. Okay. So do join us again tomorrow. I'm just going to share with you a little bit about tomorrow. Now, we're still going to talk about the quantitative easing and the stimulus package. We have seen now even the bond yield in the US, the 1 month and 3 month bond yield has gone negative. All right. So you want to know how is it going to affect the bond market or the equities market? Tomorrow we have a very special guest. All right. We have Derek Tan, who is a well-known market cycle specialist, and he will be sharing with us what's happening in the US markets and how this all is going to affect the bond markets, the equity markets, and also the forex markets. So we're going to have a discussion with him tomorrow. So please do join us. All right. So that's for tomorrow. And right after this, we also have a Mandarin session. All right. Just go to the Equity Strikers Mandarin page. You're able to view live. I think Peter is going to be there, right, Peter? Peter is going to be there. So they're going to talk about 5G. All right. And which are the sectors that's going to benefit on the 5G implementation. All right. So please do join us in the Mandarin section of the Equity Striker. So it's going to start right after this. Okay. Other than that, do you have any more to add, Alvin, Andrew, Peter?
Message. Please send a WhatsApp message to our number 603-8408-2070. Yes, the one that Benny's showing, to get your free Bitcoin.
Okay, Alvin, anything else?
Nope. If you guys want the slides, these slides will be made available for download at the same number. WhatsApp us at that number and give us 20 minutes. It should be uploaded by then. All right. See you guys tomorrow night. We are very excited. Tomorrow we'll be covering foreign stocks.
All right. See you guys tomorrow. And good night, everybody.
Okay, bye.
Good night. Bye.